Elon Musk and Tesla are the main subject of today's video, folks. First thing for me to react to and kind of give my perspective on is Tesla is now raising prices. Yes, you heard me right. Raising prices here at the beginning of the month in the United States, in China, Japan, and Canada now at this point in time. Oh man, in 1 minute they're cutting price, next minute they're raising price. Then I want to react to Ford's earnings. Ford's earnings just came out a couple hours ago. We're going to go through the numbers. Wait till you hear the loss Ford just took on their electric vehicle business. It is insane. And you got to ask yourself, a lot of people saw, some of the Ford numbers were good and why is the stock down? When you see the EV numbers, you understand why the stock is down nonetheless here, folks, okay? In the last video I want to react to is this one. I think this is interesting. Here's why former Boston Fed president would veto a 25 basis point hike tomorrow from Jerome Powell in the Federal Reserve. So I thought that would be an intriguing video to watch and react to in this video here today. I appreciate everybody joining me as always. 26,000, I think 400 subscribers now or something close to that. So I appreciate everybody being subscribed to the channel. Thanks so much. And also if you're looking to access my Become a Master Stock Market course or apply for my private group, that will be in the description area. Also be pinned comment down there. So Tesla's raising prices here. Tesla has raised price in a range of up to $290 in Canada, China, Japan, and the United States, its website showed on Monday, after the company slashed prices of the top-selling vehicles at the start of the year. The hike was the first on its top two selling models at the same time in multiple markets, although the prices across the lineup are much lower than in January. After a round of discounts, shares rose, and it was all over the place as far as Tesla stock. I don't think it was really a mover in terms of stock price. Last month, CEO Elon Musk said the company would prioritize sales growth ahead of margins. And I don't think that's something a lot of people understand, like the ramifications of this in terms of what it's going to mean for the other automakers out there. They're thinking about what it means for Tesla, and I'm like, you guys should be worried about everybody else, not Tesla, and look to profit later on its rollout of self-driving software for a larger fleet of vehicles. Since January, Tesla shifted to real-time pricing model that is closer to airlines or ride-sharing from the fixed prices of traditional auto market. Now, this is huge, okay? And it just goes to show you how forward-looking Tesla always is and Elon Musk always is, right? The fact that they want to go to a real-time pricing model, and we heard the CFO, what did the CFO say on the conference call? He said, we're looking at pricing every single week, okay? Every single week. And so they're looking at pricing of vehicles similar to how airlines do it, hotels, based upon supply and demand. And so this is a fascinating thing we have going on here with Tesla. It's quite an experiment, and based upon their volumes have looked very, very healthy. I would say it's somewhat paying off. In terms of margins, obviously it's not paying off, right? But that's more of a damage Tesla, I think, is trying to cause for internal combustion engine type vehicles, right? Musk has said the company is willing to sacrifice margins for sales volume, but is also looking to move prices back higher where it can and match output with deliveries. Prices changed the same amount in the second largest market in China as well as Canada. So they upped about $250 on the base Model Y and 3 in the United States. It's the first time since January Tesla increased price on the cheapest car, the Model 3 in the United States. The entry-level real drive Model 3 is about 14% cheaper in the United States than at the start of the year. The long-range Model Y remains 24% cheaper. And if I was any automaker out there, I'd be very, very fearful of these sorts of sales volumes Tesla's going to put up this year and what that's going to mean for the other guys. Several analysts said the move reflected Tesla's dynamic pricing strategy and was unlikely to undo the significant price cuts that sent the company's gross margins to a two-year low in the first quarter, right? But the thing you got to ask yourself is maybe what if Tesla hikes another $200, $300 next week or next month or something like that, right? These are things that should absolutely be considered. So when I look at this situation, it's really intriguing. I think Tesla's really trying to grab massive market share. This is no longer an EV market share story with Tesla. This is an overall market share story with Tesla, and they're coming for the mass market share of the United States in terms of vehicles sold in Europe, and they obviously want to compete in a major way. Let me take you to my private Discord chat here for a moment, and I'm going to take you into the Tesla chat and show you something I posted up in there that I thought was intriguing. I think it's worth me showing you this before we go any further with these videos here. Alrighty, there we are. So now we're in the private stock group's Discord chat here, okay? Check this out. I posted this last night from this gentleman. Now, this gentleman is like I guess a Neo stock investor and kind of like a huge Neo fan. But listen to what he has to say here. This is important.
So much supply in the market. It's a dog-eat-dog kind of situation. Everybody's trying to undercut each other. And even though Neo says it's not affecting them, that's what they say. Of course, they're going to say, oh, it's not affecting us. Oh, it's not affecting us. But what's the reality? Of course, there's going to be effect. People are buying Teslas over Neos. Just a couple friends of mine also, I convinced them to buy a Neo, but ended up buying a Tesla. Budget is the number one factor. It's still, right? If you can't afford a car and the other product is super.
So that's interesting what's going on in China, where this gentleman's saying, like, and he's like a huge Neo fan and whatnot. He's basically saying that Tesla is taking sales away from Neo since they cut prices significantly, right? And even some friends he had convinced to buy a Neo switched over to the Tesla side, right? And it just goes to show you kind of the brand dynamic and the product that Tesla has in the market. So we get an intriguing situation on. I think a lot of people have written a Tesla off in China, and I think that's a dangerous thing because they do have the product and they do have the brand that is, let's call it outstripping the other competitors, which they just don't have brand. Brand's very important in vehicles. You've got to have a brand that people are proud to drive, man. It's so important. It's so important, okay? Alrighty, next one up here. Ford beats on top and bottom lines. Okay, but wait till you hear the loss they just took on EVs.
Phil LeBeau has those numbers. Phil?
John, this is a beat on the top and the bottom line by Ford for the first quarter. The company earning 63 cents a share, well above the street at 41 cents a share. Revenue way above expectations, coming in at just over $39 billion. The street was at just over $36 billion.
So first off, that's a great number. Beaten by $3 billion. Great job by Ford. Great job by Ford. Now, their stock price obviously doesn't really care about this $3 billion beat, and we'll get into that in just a moment. But I got to give them props. Like, that's a very in this environment, to come in with a $3 billion beat's impressive. Very impressive.
EBIT margin of 8.1% in the first quarter. For a comparison with the first quarter of last year, that's a sizable increase. It was 6.
That's great as well. Good job by Ford.
7% last year, with free cash flow of $693 million. Remember, this is the first quarter where Ford is breaking out the performance of each division. That's significant, and here's why. We'll go over each of them. The ICE division, which is known as Ford Blue. This is your internal combustion engine vehicles. Huge quarter, $2.6 billion profit on a 10.
So they're still making bank, obviously, off their ICE division, and that really comes as no surprise to anybody, right? That's an extremely profitable business for Ford.
4% margin. The EV division, the Model E, lost $772 million, and the commercial vehicle division, known as Ford Pro, had a profit of $1.36 billion.
So two big problems here, right? One is if you have recessionary fears, right? Recessionary fears. Obviously, that could, if the recession actually happens, mid-recession, or let's call it a hard landing, a bad recession, that would obviously hurt their two profitable businesses, right, which are the commercial vehicle division as well as the traditional internal combustion engine business as well, right? I mean, just naturally, there's not going to be as many F-150s sold in a recessionary environment if that was to happen, right? And when you're taking that sort of loss on their EV division, right, set almost $800 million. And remember, that's in a quarter, folks. Run that over an entire year. If they keep taking $800 million losses, roughly, I mean, you're at $3.2 billion in losses, roughly, 3.1, 3.2, something like that, right? That's extraordinary. So this is big-time trouble for Ford here.
Commercial vehicle division, known as Ford Pro, had a profit of $1.36 billion. For the year, Ford is reaffirming its guidance of planning to earn between $9 and $11 billion, with free cash flow expected to come in at about $6 billion. And here's the significant part of this. They are reaffirming their guidance for the performance of each of their divisions, which they set out about a month and a half ago. The most significant of those, the EV division, which they said about a month ago, look, we expect to lose $3 billion. They are reaffirming that guidance that the EV division is expected to lose about $3 billion this year. Conference call coming up at 5 o'clock. We'll be on it. We'll have more details if they have anything else to say in terms of their outlook. Guys, back to you.
All right. Meantime, stocks down 2.5% in the after-hours trade right now. Any sense on why that would be the knee-jerk initial reaction here?
There's no surprises in here. And so the question becomes, Morgan, if you are a Ford investor or institutional investors, we want to know when you can turn a profit with EVs. And that's not going to happen this year. And so it's a question of what they say about, dealing with the price war that is going on in terms of, at least with Tesla. And you saw with the Mustang Mach-E, they cut prices today. And then the other question is ramping up production. Are there going to be any changes? Anything in the color commentary from the CEO, Jim Farley, when he's talking on the conference call. So I think more than anything, this is sort of there's no surprises in here. That's good news. Now we want to hear what they have to say during the conference call.
Yeah, so if you really want to know why
you.
Ford stock, is going down even after very solid results, like those are good numbers from Ford, right? There's several reasons, okay? First one is we know the entire auto market is moving to EV over this next 5 to 10 years. With it being that Ford is taking massive losses, it's a big question on when do they get to profitability, if they get to profitability for the EV business. When is it? How profitable will it be? If it is profitable, is it going to be even remotely close to what they have when it comes to internal combustion engine business, right? So people are looking at it from that standpoint. You obviously have recessionary concerns, and no one wants to own a stock like a Ford or a GM or even a Tesla for that matter if there's major recessionary concerns, right? Because it's just natural. Like look at the great financial crisis. Much less vehicles were sold in 07, 08, 09, 2010 than in previous years. That's just the bottom line. The third component of this is there's about to be a massive disruption in terms of their F-150 series, F-250, in those sorts of trucks as well. Cybertruck's hitting the market, and there's a lot of people that aren't taking it that serious, but I think some do realize it is a competitive threat to actually Ford in a major, major way. Every vehicle Tesla launches is a competitive threat. The S and X were massive competitive threats to the higher-end automakers, right, in some of their vehicles, because a lot of people that might have bought a Range Rover or a Land Rover or something like that went ahead and bought a Model X instead. Instead of buying an Escalade, they bought a Model X. I'm one of those customers, right? I own a Model S Plaid. So rather than me buying an expensive Mercedes or a BMW or some other high-end car, I bought a Model S Plaid. So when this company launches Cybertruck, it will be a major competitive threat to the F-Series lineup. It will be, okay? And I don't think enough people are taking that serious enough right now. But there likely are, because based upon that stock price, right? And obviously 3 and Y have been massive competitive threats to just all vehicles, and we're going to see that play out a lot more over this next few years. So these are some things to kind of keep in mind. And that's why Ford just is one of the most hated stocks in the stock market and why it can't go anywhere, because there's too many questions about where is this company 3 years out, 5 years out, even a year out, right? Or certainly a decade out. And that's where people are really, really confused, okay? Here's why former Boston Fed president would veto a 25 basis point hike tomorrow. Ooh, this is interesting.
Eric Rosengren joins us right now. He is now a visiting scholar at MIT's Golub Center. And Eric, thank you very much for being here. I know you think that the Fed is very likely going to raise by 25 basis points and then say they'll kind of wait and see what happens. But that's not what you would vote for if you were voting today. What would you do?
Well, my own view is that I do have concerns about the banking turmoil that we've just witnessed. And while I don't think there's likely to be any immediate failures, I do think the banking sector is under stress. So there are a number of reasons for that. Deposit outflows are continuing, and that's in part because of interest rate spreads, not just because of the banking turmoil. I think there are looming problems in the office space. And so the commercial real estate portfolio of some banks that are overweighted in the office space is likely to experience more losses than have been reflected so far. And clearly there's going to be enhanced regulatory and supervisory focus on large regionals. So I expect the loan officer survey to indicate further tightening of credit conditions. They already were tightening prior to the March turmoil. And on top of that, we have the debt ceiling and the uncertainty that's going to happen as we get into June. So Did
you guys hear what Janet Yellen, Treasury Secretary, says? She just said, and I think this was yesterday she said this, she said that, and this is very important, that they need to come to a decision by June 1st. Now, I don't think any politicians were planning on having to come to an agreement about this debt ceiling by June 1st. I think they were all thinking July, August, September, something like that. And now she's putting the pressure on them that you gotta raise this baby by June 1st or we could run out of money. ooh, that's fascinating, okay? And so, if you're thinking about something that could shake up the market, that is a potential to shake up the market and cause massive volatility over the next, let's call it 1 to 2 months.
View is that the economy is quite likely to slow down in the second half of the year, and that it's not necessary at this point to be raising.
Does he mean slow down more? Because we've already seen definitely a slowdown.
Rates until we get a better view of what the second half of the year looks like.
All of those are factors that your former Fed colleagues are probably very well aware of. Why would they then choose to go ahead and raise anyway? What's the argument for doing it?
I mean, I think the challenge is that if you look at the PCE inflation number, core PCE inflation's 4.6%. If they want to get down ideally to the low threes by the end of the year, the path is on a slower trajectory. So I think for the people that have a more hawkish stance, they're going to argue that the labor market is still tight. Inflation is still higher than they'd like to see, even though there has been significant progress, and that they think that they want to see more evidence that inflation's continuing to come down before and they're not as certain as I might be that the banking turmoil and the challenges facing the banking industry are going to be as much as a headwind as I would attribute to it.
And that 25 basis points, that'll definitely do it, Eric. That'll be the fine tune exactly the amount of demand slowdown that we. Is it me, or is this really a blunt tool? You don't know how much actually is effective in doing what you're trying to do. You got your eye on inflation on one side. You're trying to get to it.
This guy looks like, are you mocking me, man? Are you mocking me? I'm going to punch you.
Some type of nebulous slowdown in overall demand that you're hoping works. And then people say, no, not really. We need to show that we're going to stay the course. So we really don't care if the 25 basis points does anything. We just need to show that we're staying the course and the North Star. It all sounds like sort of voodoo to me, Eric. And the downside is what you're describing and what others have described. I mean, if the Hippocratic Oath really is do no harm, is it worth it?
So they are very focused on models, and models do have a pretty good way of sensing how higher short-term interest rates will affect the economy. What's much less certain is how much credit availability will affect the economy. Credit crunch periods occur for various reasons, and they don't happen that often. And as a result, the ability to predict how much the economy is going to slow down and how much of a headwind there's going to be is quite difficult. So I think for somebody who wants to see evidence that inflation is clearly getting down to 2% and is uncertain about the credit channel, they would be more willing to raise rates at least 25 basis points. For somebody who puts more emphasis on the banking sector and the credit channel, which I do, I would be more willing to wait. But there's always judgment involved in monetary policy. It's not a precise science.
Yeah, so good points by that gentleman there. I mean, if I was the leader of the Fed, what I would do is I wouldn't actually raise tomorrow. I would, however, I would leave the door open to potentially raising if we see issues with like commodities going higher, PCE going higher, CPI going higher. I would leave the door open. I wouldn't say, we're not going to raise anymore moving forward. I would not raise. I'd say we're trying to make sure all these effects of 500 basis points of raises going through here, we're trying to see the results of that, and we're obviously seeing banks fail left and right. We're definitely seeing a slowdown in the economy, so we want to just let this play out a little bit. Let's just see how things work out. If we see any spike in inflation, we'll be ready to raise rates more if we need to. But that's kind of what I would leave open. That way you kind of tame the market, because the market would still kind of be scared of like, oh, they're leaving the door open to raising, but you're not actually doing it in this one. So that's how I would, because it's going to be a fine line for Jerome Powell, obviously, here, because if they cause more of these banks to go under, it's going to hurt, obviously, the economy much more substantially. It's going to cause more I can say, dislocation in the overall lending market, which obviously eventually affects the economy and jobs and all those sorts of things, right? Which they don't want to cause a mass, because do remember, like, you know, if one's unemployment starts rolling up, I mean, you can see it happen fast. Obviously, what happened in Rona was an extraordinary situation. You're not usually going to get that to happen. But even go back to the great financial crisis and look at how quickly jobs started being lost in a massive way, and look at how fast the unemployment rate started going up. I mean, in a matter of 12 months, it shot to the moon. And so that's definitely a side that the Fed has to kind of be fearful of here, okay? So that's kind of my thoughts on all that. Appreciate everybody joining me. As always, much love. Thanks for being subscribed to the channel, folks. If you're looking to access my Become a Master of Stock Market course, or go ahead and apply for my private stock group, the private wealth group, that will be in the description area. It will also be the pinned comment down there. Much love and have a great day.